Welcome everybody, it's Bueller again. And today, since we're not doing a Sunday stream, I wanted to make this longer video to post for people to use this kind of as a rubric for what to look out for when getting your levels ready for the week ahead. So I'm going to go ahead and jump into that. We're going to clear this SPY chart. We're going to clear the QQQ chart. I'm going to go over a couple TOS settings you should turn on. And then we'll make our way through a couple tickers. So let's get on through that. So before we start, let's get over those settings first, and then we'll jump into SPY and charting and all that good stuff. So the first setting is click this little cogwheel here, and then click My Tools on each chart. This will bring up, and I'm not going to reapply because I already have it, but it'll pull up this bar right here above each of your charts. You can click on this cogwheel. You can you can edit all of these buttons to either drawing sets or an indicator or literally almost anything you can link up here. So make sure you're taking advantage of this, but more so this next one right here where it says drawings. Then you can click default and you can make up, whatever amount of sets you want. So this is just my clear chart. And then this would be that one you just saw me looking at, where I only check this on the daily time frame because all the levels and system that I'm using are to view on bigger time frames. And then, when you want to have it set for having more lines, so when you're doing your day trading, you're not totally screwing yourself by having your drawing set for your daily and your drawing set for your smaller time frames mixed into one. This way, you can put it into two. So click Create Drawing Set, and then you can name it whatever you want. You can, where is it at? You can delete Drawing Set right here. My bad, I was blind. And if you want to clear one out or you have too many, you can just clear it and start over. So take complete advantage of that tool. But let's jump into the charting now. So we're going to go to this time frame. We're going to clear everything, and we're going to rechart everything on this time frame. This is going to be for the bigger time frame, and then you're going to see me clear that next chart, and we're going to do that level. So jump out to the weekly, and let's get my bigger time frame level. So I see current prices here. All-time highs are up here. So I could start somewhere about right here, work my way up. I go to the weekly time frame, and just like when we do the TA routine on the daily time frame to help us get bigger time or smaller time frame levels, we're going to be doing the same thing, but on the weekly. Oh, and there is one more setting you could turn on. So you see how I'm clicking so quick? I'm just kind of clicking to the top of the candle, and it's jumping straight to the price action. It's going straight to the close of that candle. Go to Snap Drawings 2, and then OHLC, Open High Low Close. If you want to see how I'm clicking at that, I've had a few people ask that question, so I wanted to make that clear. At that one, I see we're well above current price now. We're just trying to get in the rest of these levels here. And yeah, you might be thinking, okay, this is going to fill up my chart, but trust me, when you're on the daily time frame, this is what you want. So we're on the weekly right now, adding our levels, and there were a couple ranges I saw that were a little big, and there's two things you can do. You can always go and find a reset candle, so if you want to add the bottom of these, awesome. But in this case, I wish I didn't just zoom out right there. In this case, I'm going to grab a halfway point. So I'm going to go from the close of this candle to the close of this candle, and I'm going to mark the halfway point, 406.05. And if you really have to get it to the cent, just right-click that level and edit it, and make it exactly what that halfway point is. So I saw there was a pretty wide range there, and there's another one up here that I want to adjust. 430.17. 430.17. I was trying to get it perfect for y'all. Auto zoom, and then now that we've completed all of the charting, we don't have to continue going up to the all-time high. If you want to, you can. Be my guest. And then there's another one right here I guess we can fill. But this is going to give you everything for the daily time frame. So just overlook it. Just be like, all right, I got every level I needed. There's not any huge ranges, so now you can go out to the daily time frame. And this is how we like to view it for when we're pattern trading. So last thing to do when you're doing these is you can add Fibonacci, of course. I always like to add either from the low to the high or from where the last low was to the high. So this was kind of like our low, and then we rallied up to here, chilled on the golden pocket, and then rallied again. So that's kind of how I see it. And then from here, where we held, to here, we've now made it all the way back to the golden pocket again. So probably going to see a little bit of fight here. If we get a push under, bears are completely in control. I mean, bears are already in control, but this is kind of the last area they need to look out for to get us back into this area. So you can see there is a huge area of consolidation here. So that's what we're going to be focused on. So if you want to grab your fibs, do it now. That'd be the great time to do it. I'm going to go out to the hourly, though, and I want to get a trend line here because I just want to see where did we break, and you don't have to add this each and every time. But a lot of people draw trend lines the wrong way. They try to accustom it to current price. That's not what you should be doing. You should be focused on 1 to 2 or even 3 points, and then extending your line to give yourself a decent trend line just to kind of look at. Again, you're not looking to make plays off of every single trend line you draw, but you want to have it there for positioning. Therefore, as you see price breaking, you can start to look for more signals. Again, we didn't just break the trend line. We broke it with a pattern and a retest. Then we kept selling off. It wasn't just, oh, we broke trend line, let's just make our way down to 380s, 390s. No, there was definitely some buyers in between. There was definitely a little bit of a slowdown on the way down, so you got to be able to point these things out. And if you want to add another trend line, you can. I'm not going to because I don't like adding these too much because they're too perspective. People are going to have them in all different angles. But we are kind of in a, let me do the channel. We are kind of in a downtrend channel, and I'm not going to make it perfect, but as you can see, and again, it's not perfect, but as you can see, we are kind of going in a downward channel towards recent supports. So we're going to be focused on playing any kind of pattern we can find. But last week, just for good in-depth review, there was not last week, last couple weeks, there was the bearish kicker that broke trend line. Price fell, and if you go from where we fell from to where we fell to, we went back up and we rejected the control point / golden pocket area again. So a perfect buyer retest without filling that gap. Again, faking a lot of bulls out. Next day, starting at the same level and making that new low. So this was definitely what you could consider a bearish continuation. Some people will say flag. Some people will say, whatever. But the new low being made with volume was what bears needed. That's what they did. They got the big move. They didn't just take out one level. They took us all the way under 406s. Gave us a little indecisive candle. A little bit more of selling. You can see there's still decent volume there. And now we're getting that same slow up against the 392s. Just about 392s to 390s. So this is where bears are going to be looking. And that's why I also did that fib early on. But this is where the bears are going to be looking to make a new low to keep us on that leg down. You could also look for moves similar to this, where we drop base, have a little bit of buyers, but then another drop. So probably look for some consolidation for either side to build up conviction for their next bigger move. Bears are going to need consolidation. Bulls are going to need consolidation. So that's the bigger time frame. TA, this is what we're going to be going off of for a while. If you want to add less than what I was grabbing, you could also do it like this. And this is just where you grab hills and valleys. So in short, it's just in short. So you see how we rallied up here, then we slowed down. So I grabbed the top, I grabbed where we slowed down, rallied, grab the top, grab where we slowed down, rallied, grab the top, grab where we slowed down, like where we held the slowdown, and continue to do that on the weekly time frame. On the daily time frame, this will end up being a super accurate way of having levels. So even if I charted it differently, I should still see that there's a lot of fighting going on here, and there is. As you can see, there's a lot of levels in this area. 390, 392, 394. There's a lot of, and there should be. This was a resistance, not even counting past price action, just counting from right here. There was a huge resistance here that price couldn't get over, and then they used it as support. So there's going to be a lot of fight in this area, regardless of who has control. So that's something I want everyone to be focused on, but that's the bigger time frame analysis. Now let's go on to the daily time frame. We'll add the same system, and this will give us everything we need for day trading these levels going into the week ahead. All right, so we've cleared our chart. We're back to the one that we want to be on for our TA routine. I just went to default. I need to readjust this one, but I'm just going to keep it on my default chart, so I don't have to keep switching around as much. So I have my range between COVID high and all-time high on SPY. An all-time high, I mean, I have it on the emerging candle, the highest bullish candle that we have there. We never closed higher than this again. As you can see, we did with 2 green candles here, but we had sellers start higher. So this is the highest that we've closed without that fight there. So you can see we started higher, failed to push that high, started higher, failed to push that new high. So this is going to be my overall top spot. And then I just grabbed the top of COVID high, before COVID high. Just so I could have a good range. So if you want to, you can add every single emerging candle in here. I'm not going to. I'm just going to jump straight over to where current price is, which is around this area. But if you want to, for good practice, it would be really smart to go from left to right and really fill up your screen. Really get it ugly, really get it full of lines, and then on your free time, review it. Review through the price action. Don't just look at the last day. Look across the last 10, 15, 20 days. Review how did these candles trade or navigate themselves through these levels. So that's what we're going to do today. Let's zoom in. I see current prices at about 392, so I want to get levels between 360s and 430s just to give myself everything I need. So let's start from here, 370. Why not? So no new high. Seller candles as high as that one, so no need to add it. And then we have that. So we already have to add a halfway point. We're just starting. Top of the green candle, top of the green candle. Red candle's higher than the green candle. No need to add that one. There's no new high here. There is a new high right here. And at any time we can go back and we can fill those ranges up. I'm just trying to get us going. Top of the green candle, top of the green candle. No new high. Zoom out so you can go out here real quicker. No new high was made by those candles. It was this candle and this candle. Then this candle. Grabbing all of our emerging candles. And now we're way up here in the 417s. Let's see how much more we need to grab. Probably not much more. We'll grab that one. And then we'll go from a Fibonacci to here to fill that up. And then we'll call that our high. We'll just stop there. Remove that. And let's go back. I think there were a couple ranges I didn't like. Like 413 to 416. If you want to fix that, go ahead. But real quick, just before you add anything, go look at your chart first. Go back to recent price action. You'll see, okay, we filled this up a lot. Start to review it now. Start to look across the price action. Oh, okay, we dipped down to 390.50s, 390.60s, and this was an area we were focused on that last Thursday. And then they held a base, they held a higher low, and they rallied. So that was a good little TA review there. You could see the next day going into Friday. And like I said, don't just review the recent price action. Try to extend your chart. You can go out to the past few days. But let's go fix some of those ranges. That's just a good kind of starting point. Again, real quick before I move on, these are already a really good starting point. There's no need to flood these levels because each and every day you're going to be re-adding your previous day open, your previous day low, your previous day close, your previous day high, and then of course going into that next pre-market, you're going to be adding your pre-market high and your pre-market low. And you can see just by going off of that, you're already giving yourself a ton of levels to go off of. So you can see that day started out with complete sellers at open after starting higher. They held support of the previous day, made it back up to that target, failed to really hold any strong price action above it. You could see one good high, a lower high, failing to make it, get that momentum. And then all of these tests failing to hold the support, ended up getting a complete sell-off from that area, breaking today's open, breaking that day's current low at that time, working themselves through pre-market, working themselves to those bigger time frame levels and those previous day levels. You could see previous day open, low, all lining up right there. And that's where they made their push towards. It wasn't just to some random area. It's always going to be to one of these levels of price action, price history, or from the previous day. These are the only areas that we're really focused on. But we're not going to leave those up because those are from the other day. I was just doing it as an example. And then let's go back out to the daily and let's fix some of those ranges that I said I wanted to fix. Let's fix some of those, like this one. Very big range there. Remove. Add that one. Because that's a huge range. Pan tools, I could pull it down easier. There's a pretty huge range between these. Add that. 394.50s. Pretty big range here. It's like a $4 range almost. Some of these look a lot better though. A lot of these ranges look way better. Alright, I think I'm happy with that. So this is what I'll be going with for the week ahead. Of course, I'll be adding my previous day high, low, close, open, all that good stuff, pre-market high, pre-market low, but you're not going to probably need it. It looks like we have everything here hitting just about, so we might not have to add as many of those. Therefore, going into tomorrow, and this is for any chart, if price gaps up and starts here, if price gaps down and starts here, if price trades to the right and is still in this area, then guess what? Then we're going to trade it based on the levels around that current price. We're not just going to randomly jump around. That's what we're focused on, and it gets us set up for everything. So yes, this is going to make your bigger time frame harder to see. That's why I'm teaching you the drawing set, teaching you other ways of having less levels for your bigger time frame TA to just view, and then having another system, which is basically the same system, to help you on the smaller time frames for day trading. So either way, you have highly accurate levels. So make sure you guys are abusing and taking advantage of this system. Make sure to review the playlist on the channel, or make sure to review some of the past live streams. We have almost 30 plus live streams recorded with over 60 hours of TA price action, review, lessons. So make sure you guys are going through that, taking advantage of your tools and resources. But let's go on to the QQQ chart, and then after that, we'll jump into some other tickers. All right, we're on the weekly now for the Qs, tech sector. So we're going to be going through these levels in the same way we did on SPY. I see them between 295 and the 300, so I'm going to be kind of focused on that area. If you want to start back lower or higher than me, you definitely can. I just like to try and start in the general area so I don't have to add a crazy amount of levels. As you can see, I'm already kind of starting too high. That should be fine. As you can see, I'm going left to right, though. Just like a book, you read it left to right. There's no point in adding right to left, or even worse, zooming out and focusing on where current price is and only adding TA because it's where current price is. That's going to give you horrible levels, and that's because you're focused on a certain variable, which would be current price. That variable is going to be moving. Current price isn't set yet. Yes, right now it might be at 295.17, but you shouldn't add TA just because that's where price is. That's going to be very just wrong. It's not going to help you out at all. Just make sure you have a consistent system. As you can see, it seems like no matter what chart I go to, I have a system for adding something, and that's because I have a consistent system. I'm not looking to add random levels all the time. We're way above price. We don't need to keep going like that. I was just trying to get this all set up. So there are a couple wide ranges, but before we go adjust anything, let's review. Let's see what does the TA look like right now, and we can already see there's already a ton of good levels here in this area. We could see, without going to the hourly, of course, you can see we broke a trend line in the same fashion that we broke on SPY, on Apple, Tesla, all these good tickers. They didn't just break their trend line. They gave really good signals. You can see we gapped up with a small bullish kicker, bearish engulfing, and then we ended up getting soldier patterns with an inside doji, potentially saying, hey, we're kind of tired up here. You know, wait for a base build and then grab more calls. But they ended up failing that. They ended up getting a bearish kicker, long-legged doji. Got another, almost looks like a little tweezer. And at the same time, rejecting trendline, they kind of broke it, held under, and then got another bearish kicker indicating, hey, we might be stepping in here for a bigger drop because we just had a bunch of slowdown signals, and then we started lower and closed that day with rising volume over the previous day, indicating, hey, we might be coming down soon. So let me remove all that. And then you can see, just like SPY, the drop, base, drop, ended up happening on the Qs. And this is across the market. It wasn't like just one sector was doing this. It was definitely an overall market reaction was doing this. And that's good. You don't want it to ever be like just staples going up and then tech going down, because then you could see there is a clear rotation happening. Whereas the whole market working together, well, now you know it's just clear buying, clear selling. So it's a little easier to deal with. And it makes a little more sense. So it's not so hard to think about. But let's go back to the weekly. It looks like I have a bunch of wide ranges that we need to handle. So there's one here. There's one here. And if you don't want to do this, again, like I said, just go add the weekly tops and the supports. You know, so price rallied up to here, grab a level there, grab a level here. Price rallied up to here, grab a level here, grab a level here, which you probably don't need to because there's already one there. So, again, have a system, have a set routine. Don't just randomly add levels. As you can see, I always have a reason to add another level. So I don't like this range. Let's fix that. I don't like this range. Let's fix that. It looks like everything else is fine. I like the distance between a lot of these levels here. Let's go back out to the daily. And yeah, at first you're like, oh, this is so clustered. But trust me, the more you review, the more you actually look at this stuff, the more it's going to start to make sense. Again, I don't expect you to look at this the first 10 or even 100 times and it instantly pop into your head. No, definitely not. No one's expecting that. But like I said, review. You don't just do it to do it so you can get into current price. You want to review so you can understand price actions. You can actually understand how to navigate these levels correctly. You can see on the bigger time frames, we like to have less levels, and we like to look for patterns with positioning for swing trades or even just short-term signals to indicate to us how the next day may play out or how the rest of the week may play out. And then on the smaller time frames, having every level set, therefore we're not sitting here twiddling our thumbs. You know, we actually understand what's going on. Regardless of everything selling off or rising, we know that our levels are going to be there to instill that confidence. So make sure you are reviewing so you actually understand some of the TA as it goes through these levels or builds base. Because, again, you don't just go up. You don't just go down. there is going to be sideways price action, and that's something that really frustrates a lot of people, especially newer traders, and that's what destroys them, is them not being patient, not understanding that that price has to consolidate to make healthy moves. You don't just get big jumps or big drops. You have to have consolidation, and that's what makes those healthy moves. So make sure you're looking out for all sides of the story at all times. But let's jump out to the default chart. We'll clear this and we'll get our daily levels going. So I see we're about right here, so I'm going to start a little lower. Whoops. We'll start there, and then we'll go past that hill, and we'll probably go a little bit higher than current price just to get every level that we need. And since I don't really feel like coming back, let's add our halfway point now, because there's already a huge range there. So let's fix that one and this one. Remove. I guess you could add this one here. This is a pretty wide range. I mean, it wouldn't really be fair to say over 295 target 300, but that is almost always going to be your main target after breaking that. But let's add that just in case. Just in between 297.50 just about. Looks like we got it. We'll zoom in. A lot of levels in that area. And again, you are going to be clustering or bigger time frame, but that's not what this is for. This is for the smaller time frame. So it looks like we have every level we need. It looks like there is a wide range here, so I want to fix that. Remove drawing, and then it looks like we got everything we needed. We can add a couple more above if we really want to. Which it looks like it's way up here when it finally does that. Add that, and then add our halfway point, because we don't like how wide that range is. Again, it's really just that simple. There's nothing else to it. We're not really doing anything fancy or super big brain. No, it's just, it really is helpful to grab those halfway points. And again, this isn't for this time frame. This is going to be messy. It's for the smaller time frame. I'm just going to go to the 5 minute for a good example. So going into tomorrow, we can highlight previous day high, previous day low, close, open, and then of course, we'll be adding our pre-market high, pre-market low. But again, review the price action. Don't think about that quite yet. So even if it means going back a few days, and you could see, like I said, there aren't always going to be days that are big drops or, you know, slow continuous price action that plays the levels really well. You're also going to have to focus on days where you have to remember, oh, so for this day, maybe there was a pattern, maybe there was something going on in the bigger time frame, whatever though, there was a clear range here. I mean, you could see 307.25 and 303.50. So not that big of a range, but this is where price consolidated the entire time, right? So zoom into the next day. Right? Let's zoom out a little. What did they break before really making that next bigger leg down? You could see price went up here, tried to hold above that range, failed, started under, and then they broke what? The bottom of that range. So this was an initiating range for that next day. So again, don't let these days ruin you. Let these days instill confidence into you, because you know really good price action is about to pop up if you have it trading in a range like this. Don't be worried, don't have anxiety, and don't swing. Why are you swinging if you don't know who has control right here? You know, that's a really big thing that a lot of people do too, is they swing just because they can. Don't swing just because you can. You should be not swinging because you want to protect your capital. If let's say you had 10 contracts or something and you were like, I'm going to swing all of these, cut 9 of them, swing 1 of them. Why are you being so greedy? You know, don't be like that. Be passive, be protective of your gains. We're not here to get rich. We're here to learn slowly over time. So focus on shedding risk as you push through targets, protecting your capital more. That's the kind of game you need to be at all times. And you can review too. After they broke that, they ended up working themselves to the next level at 301.70s. We got a little bit of a reset, and then they sold off more, right? And then that's where they've decided to try and build base for the end of that day, right? So let's highlight that. There was a decent amount of base built between that low and that first low that was made, right? Not even looking, right? Next day, we start higher. I mean, it makes sense. They just sold off pretty crazily, and they reject those same areas, if I zoom out correctly, that same area in which we're consolidating into. So highlight that. That's where we rejected. Price ended up failing, working themselves down to that same area again. So now we're kind of in a bigger range again. And then look where price made their next bigger move. Out of that range. Let me clear my chart up a little bit so it's not messed up for you guys this week. But that's how you need to be reviewing price action off the market. You don't need to be thinking about, you know, what contracts you're going to grab the next day or which chart you're going to for sure take. It doesn't matter. You don't know what direction is going to happen tomorrow. So just focus on getting the levels, visualizing, getting that muscle memory for how you navigate between the levels, rising volume, lowering volume. Talk about this in every stream. If you're going to sit here and tell me this is your first time hearing this, you've either never seen a stream or you need to go review them, because trust me, you will get a lot of good, juicy info out of each of those streams. So just take your time to go through them. But again, going into tomorrow, it looks like we are set. It doesn't matter where price starts. We will be ready on either side. But let's jump into a couple charts, and then we'll end this. But hopefully you guys are adding these levels on so far. And yeah, drop some comments. Tell me, what tickers do you guys want to see on future videos like this? Tickers on the equities market. Let's start with one of the most populars, Tesla. We're going to do Tesla, Apple. We'll do a couple others. But generally, guys, if it doesn't matter if I charted it or not, you should be using this system on whatever you're charting to visualize. And again, stick to it. A big thing with traders is they like to jump around a lot, and that's where the uncertainty steps in and takes over. It really does kind of ruin people's trading potential, really, because you're kind of giving yourself that rough start. So make sure you're giving yourself a consistent system to focus on. You're not just jumping around. So whether it's this or whatever other charting system you're using, it doesn't matter. Stick to it. Don't jump around too much. I don't like that range in between, so I'm adding that level. Oops. I don't like the range in between here, so I'm adding that level, which I have to add a couple here, so let me just zoom in. We'll get to 50%. Go from here to here. Get that 50%. You can see it starts right under that candle. Very clean. And then one more from this halfway point to this. And then we'll get that halfway point, and then we'll have every level we need in that range, at least for now. Because there's definitely some other levels, but that gets us the majority. And then, of course, we need to add one for this range. So as you can see, Tesla ends up making you use that halfway point pretty heavily early on. And it's because this massive rally they have on this far left side of their chart. But it's consistent. I've been using these same levels for a while now. I mean, I really haven't changed anything on how I chart on Tesla. So let's zoom in here. You can see they have another just huge rally, just like that far left side of their chart. We'll add a couple levels here up top. But let's start getting these halfway points, because this is where the true levels are. Remove that. Go from here to that halfway point, add the level in between that range, because we don't like how big that is. Remove that. And then again, go from the halfway point that we added here into the close and add that range. We don't like how wide it is. Then remove it all. It looks like we have everything there. Yeah, pretty good amount of levels everywhere. So again, this should mess up. This should make your chart a little dirty. What I mean by that is just having a lot of levels everywhere. But let's go down to the 5 minute. Let's review. So we could see, let me go back up to the, I need to re-edit that, the 20-day 5 minute. But it really does give you, good zoom. So if you wanted to, you could go review 20 days ago, and that'll really be helpful. Again, like I said, don't just review current price action. Review every day. So you can see just how effective this was right here at 303, which 300 is a level here too. Psychological levels, of course, but that's a different topic. But you can see price broke above the first 5 minutes, and they held for almost 2 hours after close. You could see definitely having some sort of squeeze here between their highs and lows after that push up, and then breaking out higher, making it up to that 313 almost perfectly. Look at that. Pretty clean. And then you go scroll over to the next day. What happened? Get this correctly. Price had trouble pushing higher than those 313s that we saw push up to that new high that other day. So in the first 10, 15, 20 minutes, we pushed a new high and failed that new high all in the first 20 minutes of that day. Then we had a drop base, drop pattern with complete sellers. And where did they go down and slow down at? That previous day level that price sat on top of for a potential rally. Price is back to it. So, of course, you're going to get a reaction. Should you get a reaction all the way back up this high? No, not every time. But should you expect reactions off of these levels every time? Yes, every single time. You should expect some sort of fight there, some sort of retest. Somebody has to take control for price to move farther in that direction. So you're going to see these levels get tested very heavily. So make sure you are taking the time to add these levels and give yourself that chance. And then, of course, going into tomorrow, we're going to be able to highlight our, which I'll just grab from this level, previous day high / open, so everything in between there. Previous day close, which I'm just going to highlight from yesterday's low into the previous day close. So that area, No high, no low, and then of course we'll add our pre-market low, pre-market high tomorrow, and that'll give us just about everything we need on Tesla. But like I said, if you don't like how wide some of those ranges are, because I could see some of those are pretty wide still, feel free to add more halfway points, or going out to the 30-minute time frame and trying to find levels that hit multiple times. Again, you're not looking to just grab something random. So let's say I didn't like how big the range is between 272 and 282, this entire range here. What could I look for? Let's go try to find a level. We can see price opened here, held as support here, and then later on gets tested again. So there is a clear level, even though it's not where we want it to be at 280. You can see they used it as that day's open. They held it on that day's open, and then they held it as a base build before trying to move higher or even just reacting to it. So 280 being a huge level in between. And if we really wanted to, you could see there's a previous day close right here. Or I'm sorry, a low right here that price had problem with. So if you wanted to add that hill that price slowed down at and then use to rally, then use that level. You got 276 there. And again, we did all of that without making anything up. We just didn't like how wide this range was. So let's go to the left and let's see where did the price action first get here, and let's look at it. Therefore, you're still adding levels that make sense, but you're not totally just adding random stuff. You never want to just add a random level that doesn't make any sense. But let's jump into the next one. Let's do... I don't really want to do Apple. We've done Apple a million times. We've done Tesla a million times too. We can do Nvidia, I guess. We've done Nvidia a ton. We'll clear this one. Oops, I didn't mean to go to 20 year. Go to the 5 year. We'll start way down here. So you can see prices up in the 136.50s. Let's get us a level started there at 115. Looks like a great spot. Emerging candle, emerging candle, emerging candle. Whoop. Emerging candle, emerging candle, emerging candle. We'll come back and fix ranges. Emerging candles. We can go a little bit higher. It looks like price is way down there in the 130s, so we can add those. And it looks like we have everything we need. Without adding halfway points, we already have a really good amount of levels here. So going into the next day, highlighting our previous day high / open, highlighting our low to our close. You can see just like Tesla, we have two good comfort spots on each side of that range too. So again, regardless of us starting, regardless of price, let's say price rallies in the morning before open and it's here. You know, what are the scenarios we can look out for? For whether it's SPY, the Qs, Tesla, Nvidia, you know that if it comes down to this level as support, you can look for bounce plays or for that continuation down. It's a great pivot point for each side. Think of like a kitchen door at a restaurant. It opens one way, it opens out the other. It really opens up both ways. That's what these levels are. They open both ways. Going into tomorrow, let's say they don't open higher. So that's not our scenario. They open in between range. Well, then we're just still looking outside of the range that we already have set for a good short-term plays. So look for breakouts, look for retests, look for continuations, look for reversals, look for slowdowns using these candlestick patterns that we always go over in the streams. Again, make sure to be in the streams. Just join the servers, sign up, and you'll have the link to the streams. But it ends up giving you all the recordings, all the good stuff, and you can visualize with us. We cover real-time alerts, real-time trade ideas. We chart, we give lessons, we ask questions. I engage and I interact with the stream each and every minute just about, just to make sure we're all still alive, because trading can definitely get boring or even kind of tiring after a while. So it's always good to have a stream to kind of support you. But let's do another ticker. So we have Nvidia, we have Tesla, SPY, the Qs. Let's do Square. We already did Square last week. I don't want to do BABA because they're having all that Chinese news. We already charted TAN together, so I don't really want to redo that one again. I want to have consistently same TA as my members and everybody in the stream, so I'm not going to mess with this, but this is another one we're looking at. We talked about MCD last week, having the drop, base, and then potential drop. You could see they didn't really have much of a base. They ended up just continuing to fall and then getting a reaction around the 250. So we'll continue to look at that one. CRWD was another one on bigger time frames that we looked at. So we'll be looking at all of these. But let's jump into the next ticker and get some levels going. All right, let's do Netflix next. We're all the way back here in 2018, late 2017, early 2018. You can see current price right here. It is at 226.11. So we're focused on the levels here first, and then we'll jump into those other ones. So I'm zooming in like this so I can actually see a little bit lower. Let's get our levels going. And this is just how effective they are with price history. Again, finding a system that works for you. Oh, forgot that one. Oh, that's not a good level. That's a good level. Nope, that's also wrong. Sometimes it's a little funky if you off-click. And now let's fix this problem here. We have a huge range. So we're going to add that halfway point, which 244.40 looks great. Then we'll add from this level again to this halfway point because we don't like the range between those levels. And then I think I'll leave it like that. Sometimes I like to see how it plays out. And then we'll add from that halfway point. And this does get tedious, but trust me, these levels work. Anybody who has been charting these for more than just a month will tell you how accurate these levels are and how much more confidence it gives them in trading. Because again, it's not just about having good levels. Having good levels sets up a whole lot more than just setting up opportunities. It also gives you confidence to actually take these trades, because it doesn't just take, I mean, it does. You should think like a robot. Oh, this hit, this hit, this hit, all your different variables. That's what you should get you in the trade. But it also helps having confidence in your levels trading forward. Therefore, you're not just sitting there kind of freaking out or not understanding what's going on or why is everything selling. And you'll have the system. You'll be consistent. You'll understand why, besides looking through the bigger time frames and stuff. So going through this on Netflix, you can see we still have a ton of huge ranges. If you want to, you can go back up to where we were, but I'm just going to cheat and I'm going to grab from here because there's a clearly huge range here. We'll add that. And if you want to extend to the left, I mean, it is a good level, so you might as well keep it. Same for here. And this is just so you can see it a little quicker. I've had some people ask me about this on certain charts. Guys, just adjust. You're still adding that range's halfway point. You're just on a smaller time frame. So don't pressure yourself because you're doing something a little differently than usual. I know everyone likes to be OCD or keep everything perfectly the same, but there is a little bit of give and take on some of these levels. And as you can see, we have everything just about we need. And then going into tomorrow, we'll highlight our previous day high. As you can see, I'm grabbing the wick to the meet. Previous day open. Previous day low, which you can see is kind of between both of these areas here, and our previous day close. So we'll just do this. Our low to our close, and we'll highlight everything. Therefore, going into tomorrow, regardless of price starting here, 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 even between here, it doesn't matter. We have a plan on both sides. We're ready to go. So that's kind of the important part of these levels. Having a system is having a scenario, having in front of you, because trading is conditional. You don't just, oh, this happened, I'm getting in calls. No, it's, oh, well, if they break their previous day high, they can head towards 236. If they break or if they reject these previous day highs, they're probably going to consolidate between their current day, their previous day high and their previous day open. They're going to trade between there. If they break this previous day open, they're going to work toward 228. It's all conditional. It's not, oh, this is happening. No, it's if this happens, this will happen. If this happens, this may happen. It really is conditional. So make sure you're setting up these scenarios in front of you, giving yourself that chance, that visualization practice. But let's jump into the next one. Colt one, and Boeing is one that always has not given me difficulty as much. It definitely has taken longer to get used to, I'd say. But that's really what I mean by difficult, is how long does it take you to do? Because this definitely takes a while, because sometimes you just want to focus on grabbing these levels. And make sure to check out my supply demands video. It's public on this channel. But it shows you Boeing and the perfect example on how you can chart tickers like this. So if you want to look at stuff like that, please look at the supply demand video on my channel. It's public. It's probably one of my best videos. I generally like to review it multiple times as well, just to kind of help myself stay disciplined. But a big thing on Boeing is time, price action. So jump out. You can see prices in the 150s. The first time we ever went into this area, when we hit 145, that was back in 2014, and then we went past it in the 2015s, and then after that we pretty much continued to have never really gotten back to it until COVID and all that good stuff. So let's get some levels going. I'm going to start with this one over here, of course. Actually, yeah, maybe I'll start a little higher. All right, so we got the 140s, 142s, 144s. Auto zoom back out. And you can see I'm all the way back here in the beginning of 2015. I'm not relying on random levels from right now. I don't even really care what current price is. I mean, I do, but it's to help me kind of get a starting point, not really because I care where it is and I'm not trying to custom my TA for it. Definitely don't worry about that. And you can see we got a couple wide ranges here. If you want to go ahead and start fixing some of those, you can. See, we had a pretty wide one here between the 144, 147 area. So I'm going to leave that one. And then I see two more that I have. We have one from here to here, and then the one above that. So I want to fix both of those ranges.
Grab the top of that range. Whoops. Grab the halfway point. Remove drawing. Auto zoom back out. And yeah, again, it's going to make your chart very messy. That's not what this is for, though. This is for the smaller time frames. You can see I have a big red candle here. Look how many candles to the right are under that same level. None of those are emerging candles until this one. So that's just to kind of help you with practice there. Whoop. And then we'll grab this halfway point, and then I think I'll stop it there because it's a pretty good distance below and above. If you want to add these halfway points, you can. I think I'm just going to cheat and grab this and this. Go out to the 5 minute because that's what this is for, and you'll see all of those levels hit from 2014, 2015. They end up working themselves over to current day's price action and being used. Look how crazy that is. It sold off all the way, and look where it's at, 151.17. If you were to sit here and say, Bueller, where are you getting this level from? Are you just making this up? And I'd say, all right, let's go see where it is. I don't want to be confused. Let's see, where am I getting that orange level from? It's an emerging candle from February 18th, 2015. So a very, very strong level from a very long time ago. But again, you can see just how effective price history is. Go back out to the 5 minute. And again, like I said, don't just review the past couple days. Open your chart up more if you need to. Go out the past 30 days if you need to. And review. Seriously. Go from left to right. Seriously, like add your previous day high, your previous day low, pre-market high, pre-market low, and start to talk to yourself. You know, what are the levels hitting and how are they navigating between them? You'll see just between volume, rising volume, lowering volume, a couple candlestick patterns. You don't need to know all of them. And then really, really good levels. It ends up giving you really good visualization practice for any kind of trade here on Boeing. So jump back out to the 5 day, 5 minute. Going into tomorrow, we will add this low to the close. Oops. Just like we did on Tesla, Apple, Nvidia, all those good tickers. The high and the open. And then tomorrow we'll add our pre-market high, pre-market low, and we'll have everything we need regardless of where we start on this chart. But I wanted to do Boeing because I feel like Boeing is one that a lot of people not suck at. It's just harder to kind of get a grip on it. It really is a weird chart to look at. Here, I'll show you. So this was just supply and demand. And you can see with how many levels I still have on the screen, there's a ton. You know, there's a ton of TA here. But again, our job is to narrow it down. Okay, so with that system, with the TA routine, you're giving yourself that chance of finding these setups, finding these breakouts, finding these retest plays. And then with your drawing set tool, being able to have another time frame chart, you know, this is for bigger time frame looking, and you'll notice, oh, okay, there's a huge support here in the 150s. So do you have this in the exact same fashion on that other chart? No. But this is why you have both. So you can look at this and go, okay, this is the bigger picture, and then zoom back to your smaller time frame, and you'll be like, okay, well, I know 150 is a huge area of support, and even just from smaller time frame price action, you can see 150s is a huge area of support. So gonna have to fight that a little bit. Looks like that's what Boeing will be starting the week off fighting, is the 150 area. But let's jump into the next ticker and let's see. But I wanted to do that one because it was more difficult, and I think it'll kind of get to people to challenge themselves more on some of these charts because some of them are very hard to grasp. But each one we could definitely find a system for. But let's jump into the next one. And you can see here on a financial, another kind of tough one to look at. But again, if you use the system correctly, it's not hard to chart. It just, again, takes a moment to kind of get it down or be able to look at it correctly. But you can see I'm starting all the way back here in 2017. Grabbed an emerging candle. I grabbed a halfway point between that emerging candle and this emerging candle. Emerging, 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 so on and so on. You can see all the way up. But that's pretty much through 2017 to 2018. And then you zoom on over here, where I go a little bit higher, you can see current prices will back down again. But we ended up working out some higher levels as they made new highs. And the recent price action, this is only 2019. This really isn't that long ago. So ended up working a lot of levels above price that way. Let me zoom this back down again. Go down to the smaller time frame, and you'll see, oh wow, you know, there actually is a ton of TA here. So just going off of those levels, you know, you're already even on a weird chart like JPM or Boeing, this is still giving you really good levels. So do we have to take these for day trades? No. But a really cool way is to get it for, which that's the wrong chart actually. I should probably clear that one. But you don't have to just use it for day trades. You could use it for the other method, the swing trading, or even just reviewing it. Again, please don't take this as you have to swing trade with these levels. No, you could just review price action with it. This is how I find a lot of my SPY TA very easily. Again, most of my watch lists have been super accurate. And again, I'm not giving myself credit or anything, but just using the price action, I'm able to tell you guys higher probability on buyers or sellers each and every day. So seriously, take time to review this. It'll give you a whole lot more of an edge than you imagine. Let's get some levels going. And we're on the weekly again. I just wanted to get some of the levels going to review on the bigger time frames. No level crosses that, so no need to fix it. Got a pretty good amount of levels above it. Let's see if we're okay below. It looks like we could add more below. Jump out to the daily just to kind of review it. And you'll see we had pretty, and this is when SPY had those 8 to almost 9 days trade in that range. And then in the market, we fell, held base. After a few months, we held a low, a higher low, and then another higher low, and then price rallied back into this range. As you can see, SPY went way up here. Financials like JPM did not work themselves all the way back up to here again. They just got up to that recent gap fill, so we can watch that for the future. They filled this one. That's good to see. They filled all of these going back down when they came here again, and there'll be more going back up if they base here. But as you can see, regardless of all that, there's definitely a huge area of support at the 112, 113 area. So this needs to be where we look for the next bigger signals. It looks like a lot of pops come from here, but we also have our fair share of fake outs to the downside. As you can see on earnings, that was the main time they really fell below. But look how many times they start lower. They opened lower here. They opened lower here, here before earnings. So maybe not count these 3, but you have 2. And no other day besides that. No other day has really opened under that day or closed under. It was really just around earnings. So don't let that fool you. But clear TA. And again, this is not to give you a play. This is to give you just knowledge, an advancement of the chart's information. Again, now you know, okay, well, 112s, 113s, if those ever break, we can consider a huge move to the downside towards 108s, 106s, 105s, where we currently had that test from earnings, right? If they end up holding it, huge probability if they hold that they're going to retest 116, 117s, and if they break over these 116, 117s, they can make it back up to that next area near the 120s. Again, conditional formatting. I'm not sitting here saying it will do this, it will do that. I'm saying if it does this, it can do that. Again, point out the scenarios for both up and down. It's really kind of pointless to sit here and just point out one side of the chart. And again, last thing for this, go through your sectors, go through the streams, because this will explain everything to you. Again, use those same charting methods for XLK. That's our largest sector. It's the tech sector. XLV, the second largest sector, the least popular sector. Set up those levels on this chart. So on and so on. You have discretionary, comms, and then financials. Just going through those first 5, you've already checked 70 to 75% of SPY. So you've already checked a huge chunk, and it's just by analyzing. So use these levels for analyzing. It doesn't necessarily need to be for taking a trade each and every time. Just look at these levels for analyzing, visualizing, giving yourself that chance. Like, all right, if like right here, if XLF ends up breaking 3240s, well, then we can start to look for JPM to break their 112, 113s. Again, giving us that kind of combining confirmation for a potentially higher probability play for us. Again, doesn't necessarily need to be for a play every time, but this is how you need to be visualizing. So therefore, you can kind of have that chance whenever it does pop up in real time. You're not sitting here twiddling your thumbs or hesitating or not knowing what to do. You know exactly what to do, or maybe you don't even enter a trade, just paper trade. Again, use the staircase method. Don't focus on entering trades every single day or even every single week. Focus on having good levels and understanding why price is moving between them or navigating from one to the other. You should be starting out with just one contract, taking it to the first target, doing that for months on end, doing that for a very long time. And again, if you want to start out with paper trading or mental trading, please do, but start with just one contract. Then you can start to grab 2 or 3 and then shedding your risk as you push to that first target, and you can sell your rest at that last target. Again, no one enters a trade here and then goes, all right, I'm going to hold this till I'm up 6,000%, and then they sell it here for 6,000%. No, a good trader is going to buy whatever normal amount of risk he's used to. He'll sell it at first target. Let's say he likes it pushed up here the next 2 days, right? And this is just an example. Again, guys, just don't take this serious for JPM. Sorry, I'm also trying to breathe at the same time. But price pushes into here. Are you going to just hold all those contracts blindly until it moves higher? No, you're going to shed some of your risk. Let's say you had 10 contracts. Sell 7, sell 8 of them here. Try to take those last 2 to the next one. Give yourself that chance. Again, it's not about making more money yet. It's about being able to see that it's possible and then being able to repeat it over and over and over again, because not every time is it going to continue in your direction. It's going to go against you from time to time. Again, you are going to lose. Nothing is 100%. So you need to be shedding your risk as price moves up, goes towards your direction. You could be shorting and it's going down. So make sure you're doing that. You're shedding risk as price moves on. You're not sitting here to just completely screw yourself. You want to give yourself a better chance as price is moving. So hopefully that makes sense. We talk about this a million different times in streams. So again, if you're reviewing through them, you'll definitely hear me mention it a time or two. But yeah, hopefully this helps you guys get better levels on the market, and hopefully this prepares you better on SPY and the Qs. During the week, we'll go through a lot of those sector charts a lot more. We'll go through these charts a lot more. We'll even do more TA routine this week based on people dropping tickers. So drop tickers in the comment section below, and we'll definitely try to get through them during the week. But I'll see you guys in the streams. Hopefully you guys enjoy this. I'm not going to do this every time. I just couldn't stream today. But let me know what you guys think about this style, this format, kind of setting up a bunch of charts with you guys way beforehand again, because normally I'd be doing this way later today. But now you guys have something to go off in the future, and I think I'm going to make this public just so other people who aren't members of our servers understand this is what we're about, this is what we do each week. And this is just us preparing. This isn't even us, trading yet. This is just us preparing to trade for the week, right? Tomorrow, that's when everything gets serious. We'll be focused on this chart most of the time anyway. Talking about the rally that we had, talking about the price action, what to look forward to. So we'll be just analyzing SPY as we're trading a lot of those other individual equities. So hopefully you guys enjoy this style. Leave a like, leave a comment. I appreciate all the support, and I'll see you guys on the next one.